ratio charts can give you a good indication of introduction to relative strength. Please do not confuse it with RSI. Relative strength index is a momentum indicator which is for the stock or the index you are looking at. It takes a comparison of average gains and average losses, and there is a calculation to it. But relative strength is a comparison in simple ways. So what is a relative strength which we are looking at? Relative strength is you are trying to understand the performance of a stock with another index or another stock or another benchmark. It could also be comparison of one index with another index. All right. So what you're doing is you're trying to understand performance in comparison. So it is outperformance, underperformance, etc. So how do we do it? So you do it with comparing it with the index, for example. A simple relative strength calculation is you have Bank Nifty and you have Nifty. So you divide Bank Nifty by Nifty. That gives you an indication of relative strength. If that ratio keeps on going higher, it indicates Bank Nifty is outperforming the Nifty, right? So that tells you relatively Bank Nifty is outdoing the Nifty. So the Nifty goes up 10%, the Bank Nifty goes up 15%. It tells you Bank Nifty is outperforming. So one quick way to look at relative strength is by using ratio charts. Now we go to the steps to find relative strength. So the first step is to identify the benchmark or the index that you want to use. So for example, Nifty is an index which you want to use for comparison. Now if you're taking a small cap, you would like to compare it to the BSE small cap index or the Nifty small cap index. So first identify the index. Second, identify the stocks and securities which you want to compare. The third step is to calculate the relative strength. The simplest way to calculate is divide the stocks or the index price with the benchmark which you want to take. So for example, you could be dividing Bank Nifty by Nifty. For example, Bank Nifty is 40,000, the Nifty is 18,000. You can just divide it. That gives you the ratio. This becomes a ratio chart. This can be done via charting tools or even in an Excel. Now, what are we trying to look out for? We are trying to look out for securities or the index which is outperforming the benchmark. That gives you an indication that this is an outperforming stock or a sector. And you want to be doing what? You want to be participating in a stock or a sector which is outperforming the benchmarks, right? That is what is alpha in real sense. So what you want to do is divide and look at it. The other way to look at it is you could compare it via two overlay charts wherein you could have a chart of Bank Nifty up, a chart of Nifty down just to see it. But division is also a simple and a very quick tool which we tend to use a lot more. Now let us quickly understand how does this ratio chart work. Now consider the Bank Nifty is 40,000, the Nifty is 10,000, the ratio is 4, right? 40,000 divided by 10,000, so it is 4. Now consider the index goes from 40,000 to 50,000, right? The Nifty goes up by 10,000 points. The Bank Nifty goes up by 10,000 points. The Nifty stays at the same place. Now the ratio has shifted from 4 to 5. What does it clearly tell you when you look at the ratio chart? Bank Nifty is outperforming the Nifty, right? In the same way, the ratio could also be increasing even when the Bank Nifty is falling down. Say the Bank Nifty has fallen 10%, but the Nifty has fallen 20%. So it is still an outperformer. But will you make money in this case? Not really. So what do you want? You want positive performance of the stock or index you are getting into along with outperformance with the benchmark. Now, one of the best periods which it really helps you is in sideways market conditions, wherein you get sectoral rotations which are playing out. For example, Nifty is sideways. Which are the sectors which are outperforming? And that gives you some superlative returns in a period of time when nobody else is making money. So let us see it with examples. It will be much more clearer. Now, the example in front of you is a very recent chart of Nifty CPSE to the Nifty. Now, look at this chart. The first chart on the top is the Nifty CPSE index. The chart below is the ratio chart of Nifty CPSE by Nifty. Now, what do you notice? The Nifty CPSE index in 2022-2023 started making new multi-year highs. Now, finally, what has started happening over the last few months? The ratio has also started making new highs. Like you can see, for the last 3 years, Nifty CPSE was underperforming the index or staying at the same place, right? Now suddenly the outperformance has started coming in. So this is the point of time which it tells you what CPSE is breaking out, and also it has started outperforming. So this is the place you want to be. And this has really helped in the last few months because a lot of PSE stocks across the board have done well, whether it is defense, whether it is railways, whether it is power. Now, take a look at another example. This is one of the most interesting examples of why relative strength really helps you. The chart on the top is your BSE Capital Goods Index. The chart below is the Nifty, the BSE Capital Goods with the Nifty, the ratio chart. Now, if you notice, somewhere in 2021 mid, the BSE Capital Goods Index made a new high, which was higher than 2007. So it was almost 13-14 years later, the BSE Capital Goods started making a new all-time high. Now, in this whole period of time, if you see the ratio, it has only been down. So the sector was majorly underperforming for very long periods of time. This was the first period of time where there was a huge change in terms of outperformance. Now, cut to what happens in the next 2 years. The BSE Capital Goods keeps on making new highs, takes a little bit of a correction in 2021-22. But again, it does better. And what has been the best place to be invested in the last 1.5 years? Capital goods. The index from 2021 has gone from 20,000 to 35,000, right? In the same period of time, has the Nifty gone up 50% from 2021? Not really, right? So that is the kind of huge outperformance you want to be in. So in this case, if you had capital goods stocks, like we did luckily, you had an index which was sideways and you had stocks which went up 30, 40, 60, 80, 100%. So this tells you this is a sector to be in. Then you find whichever stocks you like on a technical basis in that sector. Now, another example is Nifty Auto to the Nifty 50. This gave a breakout in 2022. It outperformed for a short period of time, then again became a market performer. So in this case, now whenever this ratio chart breaks out, along with Nifty Auto breaking out, that will indicate a fresh trend in Nifty Auto. So this is an example of where we make a ratio chart, and when we keep it on radar, okay, is there a new sector rotation again being played out in Nifty Auto? Now, another classical one in 2020-21 was the Nifty IT index. Now, this chart explains you on both the sides how it can help you to enter as well as exit. Now, look at this case. Somewhere in June to August of 2020, the upper chart, which is Nifty IT, was one of the first indices which crossed the pre-COVID highs. So that's a very strong indication, right? You've had a huge fall in the markets, and now there is a sector which is breaking out into new highs. And that is where the breakout trading strategy starts working. Now, when you go here, what happens? When you look at the ratio chart also, something interesting is happening. Between 2018 to 2020, the Nifty IT ratio to the Nifty never made a new high. So this was the time where the outperformance cycle also starts kicking in. What happens between 2020 to 2021? The index goes from 18,000 all the way to almost 38,000. It went up 100%, right? The Nifty, all pre-COVID highs were 12,400. We've still not gone up 100% over there, right? So this was the first place where the index went up 100 to 150%. A lot of stocks went up 3x, 5x in the sector. So you could play this sector in 2020 as the leading sector. Now cut to 2021 end. What starts happening? We start seeing a top somewhere in the end of 2021. We have a lower top in 2022. Then we get a big swing breakdown on the Nifty IT index. And that is also the time where the ratio also starts breaking down. What does it tell you? The outperformance cycle is over. Get out of IT. And what has happened over the last 1 year? The worst performing index, the worst performing set of stocks are IT. You can look at the same index along with NASDAQ comparison to Dow Jones, you'll get a similar conclusion. So in this way, you got the entry right, you got the exit right. What else do you want? Now, in the same way, once you've understood sectors, you can also use a stock with the same sector. So for example, if you are looking at autos right now, you will be comparing Maruti to Nifty Auto. What do you notice? When you take the Maruti chart along with the ratio chart, the ratio chart is sideways which tells you what Maruti has been underperforming. Now consider sometime in the future this ratio charts breakout along with price breakout. What would it indicate? Maruti is now going to become an outperformer. Till that point of time, do you want to be in Maruti, or in the last 1 year there would have been a better place to be? Now look at this thing. Sometime in 2022, Mahindra & Mahindra broke out into new all-time highs. And after almost 3-4 years, it started outperforming the Nifty Auto Index. Now that was the time at 800,000 rupees, which is where Mahindra & Mahindra caught up on your radar. And that was the time Nifty Auto was also breaking out compared to Nifty. So you got the sector right, you got the stock right. Mahindra & Mahindra went up from 800,000 all the way to 1400 in that period of time. Similarly, in the end of 2020, what do you notice? Tata Motors, which was an underperforming stock all through the last 5, 6, 7 years, when you look at the ratio chart, it kept on underperforming the Nifty Auto Index. Sometime in 2021, we start seeing a breakout in terms of price on the Tata Motors chart as well as on the ratio chart. What happens? The stock goes from 150 to 540. So you coincide the chart along with the ratio chart, gives you a lot more conviction. Now, recently, what do we notice? Bajaj Auto hits a new all-time high. Now it is also about to start outperforming the Nifty Auto Index. So this is a stock which comes on our radar. Same way, Eicher Motors to Auto, it has been sideways, so it goes out of the radar. Then look at this. Over the last few years, if you look at Hero MotoCorp to the Nifty Auto, sometime in 2021, it started underperforming the Nifty Auto Index. So that was the time you did not want to be in Hero MotoCorp, right? But sometime in the future, this ratio chart also has to change for you to get into Hero MotoCorp. The best example of what can happen in leadership, you get a new high on TVS Motor. It also starts making a 4-year high on the ratio charts. So it's not just TVS Motors breaking out, it is also breaking out on a long-term ratio chart. A classical outperformance cycle comes in. The stock goes up a nice 40-50%. So to sum it up, ratio charts can give you a good indication of what are the leading sectors, leading stocks. It can be used in multiple ways. We look at it in a lot of details in our course on sectoral analysis, which is there on Upsurge.club. So go through that if you want a lot more detail in terms of understanding sectoral leadership while using such relative strength charts.